What if America's greatest export isn't freedom, but debt? What if every paycheck, every tax dollar, and every government promise was built on a silent addiction, a system designed to grow debt faster than wealth, until collapse isn't just inevitable, it's engineered? You've heard the number, $33 trillion. But behind that headline figure lies a truth so buried, so deliberately ignored, that it's become the foundation of global power itself. This is the story of America's hidden debt trap, the $33 trillion lie that binds not only a nation but the entire world. Welcome to Dark Finance, where we expose the truths your economics professor and your favorite news anchors were never allowed to tell you. Where are you watching from? Let us know in the comments, and if you're ready for the unfiltered truth about the global money illusion, hit subscribe now, because what you're about to learn changes everything you thought you knew about money, freedom, and control. Let's rewind the story. The year is 1913. While most Americans were preparing for Christmas, a small group of bankers and politicians were finalizing one of the most powerful financial coups in history, the creation of the Federal Reserve. They called it a stabilizing force, a way to protect the nation's money supply. But what it really created was a private mechanism to print money from nothing, loan it to the government with interest, and lock generations into a cycle of debt that could never be paid off. Sound familiar? From that moment on, every dollar in circulation wasn't just currency, it was debt. When the government needed money, it didn't print, it borrowed it. And who lent it? The same institutions that controlled the Federal Reserve. The promise was simple: stability through controlled inflation. The reality: a century of engineered dependency. Fast forward to 1971. President Richard Nixon stands before the world and ends the convertibility of the dollar to gold. Overnight, money became purely imaginary, a promise backed by nothing but trust. Gold was gone. Accountability was gone. What remained was a digital illusion with infinite expansion potential. Sound familiar? From there, the debt curve didn't just rise, it exploded. Between 1971 and today, the US national debt increased over 7,000%. Trillions became normal. But here's the part they don't want you to see. This explosion wasn't a failure. It was a business model. Because debt is no longer a burden in this system, it's the product. By the early 2000s, the US had mastered the art of weaponizing its own debt. Treasury bonds became the world's most trusted asset, used as collateral for everything from mortgages to global trade. And foreign nations, especially China and Japan, began hoarding them not because they trusted America, but because they needed the dollar to survive. In other words, the world became addicted to America's debt, just as America became addicted to printing it. It's the perfect symbiosis of illusion, each side pretending the other can't fail. But as of now, the cracks are showing. $33 trillion in national debt. More than $250 trillion in total liabilities when you include corporate, household, and unfunded promises. And globally, the number soars beyond $300 trillion more debt than the planet's total wealth. How can that be real? Simple, it isn't. The system survives because confidence remains. As long as the world believes the US dollar has value, the illusion continues. But what happens when belief breaks? The answer begins with the mechanism they never explain. The Federal Reserve's invisible printing press. The Fed doesn't literally print cash, it creates digital reserves. Entries on a screen that multiply through a process called fractional reserve banking. For every $1 real, banks can lend 10 or more. It's exponential, illusionary pyramid disguised as prosperity. Now, imagine this pyramid on a global scale. The Federal Reserve prints liquidity. Foreign central banks buy US debt to stabilize their currencies. Global corporations borrow against those bonds to fund operations. Every tier depends on the one below it, not collapsing. But what happens when interest rates rise? When governments can't pay interest? When the illusion requires ever more debt to sustain itself? You begin to see the trap. And here's the cruelest twist of all. This trap is deliberate. Because a population in debt is easier to manage than a population with savings. When everything you earn barely covers what you owe, you work harder but stay poorer. Inflation quietly erases your purchasing power. Taxes drain what's left. And yet, the economy keeps growing. Growth measured not in wealth, but in debt expansion. Sound familiar? It should. The Romans did it with silver coins. The British did it with colonial bonds. Today, America does it with treasury securities. Every empire builds its power on a currency everyone else must use. And every empire falls when that currency loses faith. But this time, the fall won't be local, it'll be global. Because every central bank, every major economy, is tied to the dollar's fate. When the US debt bubble bursts, it won't just take Wall Street down. It'll take the entire international system with it. You won't believe the name behind this illusion, because it isn't one person, it's an entire network. Central bankers, hedge funds, and political dynasties who profit every time debt grows. The more the government borrows, the richer they become. The mechanism: treasury yield, arbitrage, liquidity swaps, and global debt recycling, the most sophisticated Ponzi scheme in history. Let's pull back the curtain. The $33 trillion US debt is only the surface. What lies beneath it is a complex web of financial engineering so vast that even most policymakers don't fully understand it. It's called the global dollar liquidity system, and it's the reason every major bank, government, and corporation on Earth dances to America's tune. Here's how it really works. When the US issues debt treasury bonds, the world buys them. Why? Because they're considered risk-free. Pension funds, insurance giants, even foreign central banks need them to balance their books. But that trust is built on a lie. Every dollar the government borrows is created from thin air, backed only by the promise of future taxation: your labor, your productivity, your time. Now, here's the kicker. Those bonds don't just sit idle. They're used as collateral in a secretive, trillion-dollar shadow system known as the repo market. Banks and hedge funds trade these bonds overnight to borrow cheap money, leveraging them over and over again. Some estimates say the same treasury bond can be rehypothecated up to 30 times. Think about that $1 of government debt creating $30 of private leverage. Multiply that across the entire $33 trillion debt stock, and you begin to see the scale of the illusion. It's not $33 trillion. It's hundreds of trillions in synthetic money debt stacked upon debt, all pretending to be wealth. And when something breaks in this system, the Federal Reserve steps in not to save the public, but to save the pyramid. Remember 2008, the subprime crisis? They told us it was about housing. It wasn't, it was about collateral. When the value of those mortgage-backed securities collapsed, the banks lost access to their borrowing lifeline. The global system froze. Trillions in liquidity vanished overnight. And what did the Fed do? It printed money. $700 billion in TIA, then $3 trillion in quantitative easing. By 2020, the total hit nearly $9 trillion. Money conjured from nowhere to backstop a system designed to never stop borrowing. Sound familiar? This is the modern version of alchemy, turning debt into money, illusion into control. But unlike gold, which has limits, digital money has none. That's why the debt can never truly be paid. If the US government tried to pay it off, the entire world economy would implode because global finance depends on the constant creation of new debt. Now, look at what's happening today. The US spends over $1 trillion a year just on interest payments. That's more than it spends on defense. And as rates rise, that number is exploding. In 2025, it's projected to cross $1.5 trillion annually. That means America is now borrowing money just to pay the interest on the money it already borrowed. That's not sustainability. That's a death spiral. But here's the sinister brilliance. The very people warning about the debt are the ones profiting from it. Every new bond issued means new fees, new trading opportunities, new derivatives. Wall Street doesn't want the debt. It wants it bigger. Because debt is liquidity, and liquidity is power. And internationally, it's even worse. The dollar's global dominance means other countries must borrow in dollars too. Nations like Argentina, Turkey, and Sri Lanka have collapsed under dollar-denominated debt they can't print their way out of. Meanwhile, the US can create dollars at will. It's a rigged game, the empire of debt, ruling through the illusion of stability. Sound familiar? It's the same pattern that toppled every empire before it. The Romans diluted silver. The British over-leveraged their colonial bonds, and America. It's leveraging the future itself. Now here's the hidden mechanism that ties it all together. US Treasuries as global collateral. Central banks in Europe, Asia, and the Middle East hold trillions of these bonds as reserves. They use them to issue their own currencies, creating a mirror image of the US system abroad. That means the Federal Reserve isn't just America's central bank, it's the planet's unofficial lender of last resort. When the Fed sneezes, the world catches pneumonia. And when liquidity dries up, as it did in 2019 and again in 2023, who steps in? The Fed. Dollar swap lines, emergency lending facilities, global bailouts disguised as stabilization. They tell us it's about protecting markets. But what they're really protecting is control. Because the moment the world stops needing US dollars, America's empire dissolves overnight. You see, this isn't just economics. It's geopolitics wrapped in accounting. The dollar's dominance allows the US to sanction nations, finance wars, and live beyond its means, while the rest of the world foots the bill. And every citizen, every worker, knowingly fuels it through taxes, interest, and inflation. But the illusion is cracking. China and Russia are building alternative payment systems. BRICS nations are stockpiling gold. Countries like Saudi Arabia are considering pricing oil in non-dollar currencies. The global south is quietly preparing for a post-dollar world. And when that day comes, the $33 trillion lie will collapse under its own weight. Here's the terrifying part. They know this. The architects of the system are already moving to the next phase: digital control. Central bank digital currencies, or CBDCs, are being tested worldwide. They promise convenience and security. But behind that promise lies the ultimate goal: total traceability, programmable money, and the ability to shut off dissent with a keystroke. The debt trap will become a digital cage. And just like before, they'll sell it as progress. Sound familiar? The debt cycle isn't about economics, it's about obedience. A nation buried in debt doesn't make sovereign choices. It obeys its creditors. And when the creditors are the same institutions that print the money, the illusion of democracy fades into the reality of financial feudalism. We've seen this before. In ancient Rome, inflation hollowed out the empire. In 18th century France, paper money led to revolution. In the 20th century, Weimar Germany drowned in debt before it turned to extremism. History doesn't repeat, it rhymes in interest payments. And now, America stands at the same precipice. 33 trillion in debt, a currency backed by nothing but faith, and a global system addicted to a lie. But here is the final question you need to ask yourself. If money can be created infinitely, why are you always broke? Why do wages stagnate while billionaires multiply? Why does every solution require more borrowing? The truth is simple, because the system isn't broken. It's working exactly as designed. The debt trap isn't an accident. It's the foundation. And as long as we believe debt equals wealth, the illusion will continue. Until, one day, confidence shatters and with it, the empire built on borrowed time. So, what happens next? Either the world resets voluntarily, the collapse resets it for us. When the debt bubble bursts, dollars will vanish, markets will freeze, and governments will scramble to invent a new system of control. It will be sold as salvation, but it will mark the end of financial freedom as we know it. Because once you understand that debt is power, you realize power was never meant to be shared. So, are we wiser nor just walking the same path in better suits? If you believe people deserve to know the truth about how money really works, share this video, drop your thoughts below, and join the dark finance community. Because the only antidote to illusion is awareness, and awareness starts right here.